Alright, hi everyone. Welcome to today's webinar brought to you by IC Markets, where today we'll be looking at a live analysis session. Alright, thanks everyone for tuning in. Right, before we start, let's go through the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra, so I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Alright, before we dive into the charts and trading view, let's take a quick look at the key economic events that are lined up for this week. It's quite a heavy calendar, but I'd just like to highlight three of uh, the more important events that are lined up. Right, we have inflation data out of Australia on the 24th of April. That's Wednesday. We've got the PCE price index as well on Friday. This is the Fed's preferred measure of inflation. And we've got a central bank meeting as well. We have the Bank of Japan releasing its monetary policy statement on Friday, 26th of April. Right, so here's the calendar from Forex Factory. Take note, my time is I'm on GMT time here. So we've also got PMI data coming up tomorrow. Right, we've got flash composite PMI data for Europe, the UK, and America as well. We've also got, I believe, Australia and Japan data as well. And then on Wednesday, we have CPI data out of Australia that's very likely going to impact the Aussie as well. We've also got retail sales out of Canada on Wednesday. Then we've got GDP data, unemployment claims on Thursday. We've got core CPI data, Tokyo core CPI data as well. And of course, we've got on Friday, the Bank of Japan releasing its monetary policy statement, as well as a press conference by Governor Kazuo Ueda. And we've also got the PCE price index to be released as well. Now, starting off with Australia, CPI data or inflation. Right, so on the left here, I've got the monthly CPI indicator on an annualized basis. We can see that it's remained at 3.4% since December 2023, and the estimate for March is highlighting or pointing to another month of relatively unchanged inflation here. So on a monthly reading and an annualized on a for the monthly CPI on an annualized reading, CPI inflation is expected to remain unchanged at 3.4% year over year. Right, and when we look at the inflation rate on a quarterly basis, it is expected to edge a little bit higher from 0.6% in the fourth quarter of 2023 to 0.8% in the first quarter of 2024. Now, should we see inflation surprising markets and coming higher than the respective forecasts here, it could potentially function as a bullish catalyst for the Aussie. So take note, although inflation has been trending lower in Australia and when looking at the monthly CPI indicator, it has remained relatively steady over the last 3 months. Do not rule out a surprise reading to the upside, especially when we see Q1 inflation data increasing from 0.6% to 0.8%. So perhaps we could see the monthly indicator increasing for the month of March. So take note of that. We could see a potential bullish catalyst for the Aussie come Wednesday at 1:30 a.m. GMT time. Right, moving on to Friday, we've got PCE data that's going to be released at 12:30 p.m. GMT time. Take note, the PCE price index is the Federal Reserve's preferred measure of inflation, and after looking at the recent inflation data, which is CPI and PPI data out of the US, which has showed inflation re-accelerating over the last 3 months, it is very likely the PCE price index is likely to show similar results as well. Right, so the forecast for, okay, so on this page here, I've got the month over month chart for headline PCE, which is on the left, and the core PCE, which is on the right. So as you can see here, since January 2024, looking at the monthly reading for headline PCE and core PCE, we can see that it has increased quite strongly. as compared to the period from October to December, right? As compared to the last quarter of 2023, we can see PCE price prices for the PCE index increasing quite sharply on a monthly basis, right? So we have 0.3% respectively for the month of March, which is also another high, pretty high, relatively high increase as well. Once again, should we see in the actual result come in higher than 0.3% for both headline and core PCE? Of course, this is very likely to trigger a strong demand for the dollar. Similarly, when we look at the annualized rate for PCE price index, on the left I have the headline PCE chart, and on the left I have the chart for core PCE. Although on an annualized reading, we can see that inflation has, or PCE, the PCE indices has moderated lower quite significantly. However, we see that on the forecast for March pointing to a slight re-acceleration in headline PCE. So once again, should we see this results come in higher than the respective forecast, is all but certain to trigger a return of the dollar bulls. And that means, of course, dollar index is going to jump quite strongly, and currency pairs like the euro, the pound are likely to tumble. All right, and finally, we have the Bank of Japan up on Friday, right? At its last policy meeting, it raised its key interest rate from negative 0.1% to bring it up to zero. So it raised it by 10 basis points. This was the first time the Bank of Japan had actually increased its key policy rate, and the last time it raised rates was back in 2007. Right, so they are quite likely to raise its key policy rate once again. Why do I say that? Because after although inflation retreated quite steadily in the fourth quarter of 2023, right on the left I have the chart for headline CPI, and on the right I have the chart for core CPI, both on an annualized basis. So as you can see, in the last quarter of 2023, inflation did retreat quite steadily, it moderated lower. However, we saw a re-acceleration in inflation at the headline reading and the core reading in the month of February onwards, right? So we see this inflationary pressures taking root in Japan, and that's quite likely going to keep the Bank of Japan on their toes. So come Friday, we're quite likely to see the Bank of Japan raise its key policy rate once again. Now, whether they raise it by 10 basis points, 20 or 25 basis points, it's anyone's guess, but it's quite likely they are going to turn out to be pretty hawkish come Friday. So what that means is we are likely to see the Japanese yen strengthen. So that means the currency pairs such as the Japanese yen and the dollar yen and all other yen crosses are likely to fall. So take note of that as well. All right, okay. With that, let's move on over to the charts and trading view. Right, okay. So here I am on the chart for the dollar index, and I'm on the daily time frame. So as you can see, since the second week of April, the dollar index has bounced strongly off 104 to climb as high as 106.50 last Tuesday. Right, it's sort of consolidated around 106.20 over the last few days. And although the dollar index did open to drop lower, how low did it drop today? It dropped to drop as low as 105.98. It does look like it has reversed to climb higher now. Right, so quite clearly on the daily time frame, right, the first resistance for the dollar index is at 106.37. Right, that's pretty clear. And of course, the second resistance is at this multi-swing high that occurred on October of 2023 and November of 2023. So that's at 107.05, and this is the level that we're going to be using to identify as our second resistance. Right, we can see the market structure here, highlighting a very significant swing high. Right, essentially we are seeing a double top here, or we saw a double top, the first that occurred in October of 2023 and the second taking place in November 2023, right? So you can see a double top marking a significant swing high resistance, an area which we're using to identify as the second resistance for the dollar index. Right, okay, then when it comes to support, right, we can see price has Well, okay, so first of all, when I look across this price level here at 105.92, we can see the dollar index previously running into a little bit of resistance here in mid-November, right? As it fell down sharply at the beginning of November, it retraced a little bit higher, but stalled around 105.95 before reversing to continue the downtrend, right? So this level here at 105.93 previously functioned as a pullback resistance, but now we can see on last Wednesday and last Thursday, and including Friday as well. Rather, pretty much the second half of last week, we can see the dollar index has bounced off this level. So this creates a pullback support, right? This is a very significant pullback support. So hence, this is a level that this level at 105.92 is what I'm going to use to identify as my first major support. Right. When it comes to the second support for the dollar index on the daily time frame, right? When I look across 104.94. This is also another major overlap level. We can see price has bounced off this level strongly on 3rd of November 2023, running into resistance here in mid-February and running the resistance at the beginning of April as well. Right, we can see uh, a strong bounce here, pullback support here taking place in November. We can see a swing high resistance that occurred in mid-February and another swing high resistance at the beginning of April as well, right? So this creates a very significant overlap level at 105.02, which is what we're going to use to identify as our second support. Right, okay. We can also use Fibonacci retracement here. Probably there's a couple of retracement that we can use. The first that I'm going to use starts from here, this low here on the 9th of April, going up to the high on the 16th. Let's pull up all the fibs. Right, okay, we can see that the second, okay, first of all, we can see that the retracement at 23.6% aligns very well with the first support. And we can also see that the 50% Fibonacci retracement is also within the vicinity of the second support as well. So let's keep 23 and 50%. And I'll just highlight this as a zone over here for the second support. Right, I think there's a second retracement level that I can use. That's going to run from here. This retracement will start from this low here, 8th of March, going up to last Tuesday's high. Let's pull up all the fib once again. We can also see that the retracement at 38.2% aligns very well with the second support, so giving us a Fibonacci confluence amongst the Fibonacci retracement at 38 and 50%. And we can also see that the 61.8% retracement aligns quite well with this pullback at 104.08 that occurred in the beginning of April. So this is another potential future support level for the dollar index. However, this is quite far from where the index is currently trading. So let's just keep 38%. Yeah, we'll just keep 38% for now. All right, okay. Now, these are the key levels for the dollar index on the daily time frame. Let's move on over now to the 4-hour time frame and fine-tune the analysis should it be necessary. Right. We can also see here on the 4-hour time frame, we can also see that the Ichimoku cloud over here is bullish in color. Sorry, it's green in color, so that indicates a bullish momentum. And typically, when the cloud is bullish or green, it can help us identify potential areas of support as well. So not only do we have the Fibonacci retracement at 23.6% and this overlap level at 105.92, we've also got a bullish Ichimoku cloud that can help us identify further an additional area of support for the dollar index. Right, so as of now, we can see pretty much since 15th of April, since last Monday, the dollar index has pretty much ranged between 105.80 and 106.40, right? It's been ranging between in an 80 pip range since last Monday, right? So practically it's not been doing much over the last 5 to 6 trading days, right? It's probably waiting for the next catalyst to either drive it higher or lower, right? And with inflation remaining persistent in the US and with the Federal Reserve now turning a little bit hawkish once again, it's quite likely we're going to see the dollar index edge higher as the week progresses. So take note, as of now, it is still ranging approximately between 105.80 and 106.40, which is a range that has been respected since 15th of April. So we're quite likely to see continue trading in this manner, it's going to be remain elevated. The dollar index is going to remain elevated over the next couple of days at least, until we get the next major catalyst, which is going to either drive it higher or break it out of this range here. Right. Okay. So at least when looking at it on a 4-hour time frame, I think uh, the respective resistance and support levels are fine. There's no real need to fine tune the analysis. So right, let's go back to the daily time frame so you can see quite clearly. The first support at 105.92 is a significant overlap support. Second support at 105.02 is another significant overlap that is also supported by a Fibonacci confluence, that is the retracements at 38.2% and 50%. Right, and of course, first resistance is around 106.40, which is a level that occurred last Tuesday and Wednesday. And of course, the second resistance at 107.05 is this multi-swing high resistance, or this big swing high resistance that occurred in October and November of 2023. Right, so these are the key levels for the dollar index on the daily time frame as well as on the 4-hour time frame. All right, okay, let's just move down the chart. We'll go through the majors. We'll go through a few more of the majors. Then we'll of course look at the commodities as well. And of course, should you have any requests for any analysis, do not hesitate to drop them in the chat box on YouTube, right? Drop them in early so we have time to go through the analysis together. All right, okay, so with that, let's move on down to the euro. Once again, we'll start the analysis on the daily time frame. Right, so with dollar gaining strength over the last few weeks, right, since mid-March, we can see since the middle of March, the dollar has rebounded quite strongly from 102.70 to about 106.20, right? So that means over the same period, the euro has retreated as well. So you can see here since middle of March, after reaching 1.0950, price stalled around this region in mid-March before reversing to tumble quite hard, right? Especially on Monday, 8th of April. Oh, sorry, this is the weekly chart. Let me go on to the daily. Sorry. Right, so you can see here middle of March, price the euro ran into resistance around 1.0950 and reversed quite strongly until the beginning of April, retraced a little bit higher, but then resumed a downtrend once again. So you can see here this is a pretty bearish market structure, right? It's a pretty bearish market structure. I believe on the daily time frame we may be able to highlight a potential bearish channel as well. Let me see if there's one that's worth highlighting. No, probably not. There's not really one that's worth highlighting, but in general we can see that the market structure just indicate a pretty bearish outlook or bearish structure for this currency pair. Now of course we saw the euro find strong support last Tuesday and Wednesday at around 1.0614, so quite clearly this level here is going to be the first support level for the euro, which is at 1.0618. Right, looking a little bit lower, further below, right, if I were to look for the next major support area for the euro, it's quite likely going to be around this level here at 1.0553. We can see here at the end of October and early November, as the euro pulled back from 1.0660, it found support around the region of 1.0560 for a period of about 5 to 6 trading days before reversing to bounce higher. So quite clearly 1.0553 is a pretty significant support area, which is what we're going to use to identify as the second support level here. Okay, now when I look across this price level here at 1.0664, this looks like to be a pretty decent pullback resistance level, right? It is probably not the most significant resistance level, so hence I'm going to identify it as a intermediate resistance, but we can see that it is a level where the euro has failed to break out of since last Wednesday, right? Since last Wednesday, you can see quite clearly it has failed to break out of this zone here, which is about 1.0664 to 1.0690, right? So probably I would say this is the major level here, right? This is the major level here. It's an overlap resistance level at 1.0695. Previously, price found strong support here back in mid-February, and of course last week as well, especially on Thursday, we can see that the euro failed to break above 1.0695, thus creating this overlap resistance here. So I'm going to use this, I would use this level here to identify as my first resistance. Right. Okay. We can also use a Fibonacci retracement. We can start the first retracement from here. This high on 9th of April, going down to the low here on the 16th. We can see that this overlap resistance here, the first resistance, sits quite close to where the 38.2% Fibonacci retracement is. So let's just keep that on and highlight it as a zone. And if I were to look a little bit further up, there's no major resistance that I see until this pullback level here, which is at 1.0859, but that's quite far away. Perhaps we can use the 61.8% to help us identify any suitable levels in between. Right, even the 61.8 doesn't correspond to any major pullback or overlap resistance level. However, I would just like to point out that just keep an eye out around the 61.8% Fibonacci retracement, because if we do see the euro break above 1.07, it could potentially run into resistance around the golden ratio here at 61.8%. So take note of that. Although there's no major overlap or pullback that I see across this price level here, which is at 1.0778. However, this region here could offer a pretty decent resistance, especially when I look at the Ichimoku cloud here. Sorry, this cloud isn't the best cloud. Let me see if I can highlight the color a little bit. Could change the color to make it a little bit more. Okay, wait, yes, let me try and. All right, okay, this is a little bit better. Okay, right now, when we can see, okay, so I'm on the daily time frame. Take note that when the Ichimoku cloud is red in color, it indicates bearish momentum, and a bearish Ichimoku cloud can also help us identify areas of resistance as well. So we can see that the 61.8% Fibonacci retracement level aligns quite well, or lies within the region of the bearish Ichimoku cloud. So this could be a potential area of resistance as well, right? This could be a potential area of resistance, although there's no major overlap or pullback that I do see here. The next major overlap or pullback resistance level that I do see is at 1.0859, which is this pullback resistance level here that's taken place, that's occurred since 4th of April. But however, take note, 61.8 and this bearish Ichimoku cloud could be another major area of resistance as well. All right, okay, so we've got that. Perhaps, okay, maybe there's one more Fibonacci retracement that I could use. Started from here, this swing high on the 8th of March, going down to the low here on the 16th. Let's pull up all the fibs. Right, we can see that the 23.6% Fibonacci retracement aligns quite well with the first resistance. We can also see the 50% retracement aligned close to the 61 over here. So let's just keep 23, 50, and we can also see the 61 aligns quite close to the pullback here. So let's just keep 23, 50, and 61. Right, okay, so these are the key levels for the euro on the daily time frame, right? As you can see here, it's also consolidating as well, right? We notice that the dollar index has been ranging between 105.90 and 106.40 since 15th of April. Similarly, we also see a similar consolidation for the euro, right? Since mid-April, it has range approximately between 1.0620 and about 1.0695, so about a 70 pip range. It's pretty wide range, but you can see it's not there's no real bullish or bearish momentum. to price action, we are seeing a very neutral outlook with regards to price action here. Right. Okay. Now let's move on over to the 4-hour time frame and see if we can fine tune the analysis if necessary. All right. So when I look at the chart on the 4-hour time frame, right? Remember this level here. I had I had identified as a pullback resistance. However, I'm just going to fine tune it and move it up to 1.0880 on the 4-hour time frame. First resistance, no change. I think this is perfectly fine. Okay, if anything, I'll just bring it up here to about 1.0700 exactly. First support, I'll just fine tune it a little bit as well. Bring it down to 1.0614. And for the second support, I'll adjust the second support as well. And yeah, this is a little bit better. Okay. Right, so as we drop down a time frame or two, it may be necessary to fine tune the levels a little bit, but generally you can see where the major resistance and support areas lie at. Okay, first resistance. The second resistance, I'm going to use the combination of, okay, I would use highlight it as a zone. Right, I would highlight the second resistance as a zone. Right, we've got the bearish Ichimoku cloud, which is in red in color. We've also got the Fibonacci retracement at 50% and 61.8% as well. All right, so we can also see, take note here on the 4-hour time frame that the bearish Ichimoku cloud here can offer areas of resistance as well. So it's quite likely we're going to see the euro drop lower towards the first support as the European session is currently underway, and of course once US markets come online as well. Right, it's quite likely we're going to see the euro push down lower towards the first support at 1.0614. All right, let's take a look at the pound. Right, similarly we'll start on the daily time frame first. You can see here the pound is in a very strong downtrend here, right after coming as high as 1.2892 in the first week of March. It has reversed quite strongly to drop. Of course, there have been retracements to the upside along the way, but generally you can see this is a very strong downtrend for the pound. And where the next major support could come in is this pullback support level here at 1.2187. Right, there's no real other level that I can use to identify as a major support area. So for now, I'll just keep 1.2187 as the first major support, and the second major support for the pound is quite likely to come in at this pullback support level here at 1.2106. This is a support level that occurred at the end of October 2023. Right, now what about resistance? Right, there is a pretty decent pullback resistance level that we can use here. Right, you can see a price sort of consolidating around this area here, failing to break above 1.2463 before reversing to drop quite sharply. So this does look like to be an area of resistance. So I'm going to use this level here at 1.2463 to identify as my first resistance. Now second resistance could be around here as well. Right, when I look across this price level here, you can see price finding support here on 15th of April, 1st of April, and then as price broke down, it sort of consolidated around this area here. It was trying to retrace higher on the 11th of April, but failed to break above 1.2600. So this is another potential resistance area. So I'll highlight this as my second resistance. Right, hi morning, Ryan. All right, okay, sure. All right, perfect. Yeah, we just started covering the pound, so just in time, and we can cover the Aussie after this as well. All right, great to see the requests come in. Right, and if you have anything else, right, do drop them in the chat box, and I'll be more than happy to go through the analysis with you. Right, so as I was saying, the pound has been in a strong downtrend since 8th of March. Of course, there's been strong retracements to the upside along the way, right? But generally, there looks like to be no obvious bottom or no obvious strong support level for the pound until we reach this pullback support level here at 1.2187. Right, okay, so these are the key support and resistance levels for the pound on the daily time frame. I think we can use the Fibonacci projection to perhaps identify some intermediate support levels, because as we can see quite clearly, this level here at 1.2187 is pretty far from where uh, this currency pair is currently trading. Right, it is almost about 200 160 pips away, right? So let's see if there are any intermediate support levels that we can identify, and we may be able to do that by using a Fibonacci projection. So the projection tool requires 3 points. So the starting point is going to be this swing high resistance here on 8th of March, going down to point 2 here on 1st of April, and ending here at point 3 on 9th of April, right? So in this case, we can see that uh, the pound has already broken through all the projection levels here and is currently breaking through the 100% projection level. So we can't use this projection anymore. Perhaps we can try and use an extension level. So this extension levels are found by running a Fibonacci retracement. So we'll start this retracement from here, 5th of February, going up to this swing high here on the 8th of March. The key extension levels lie at 127 and 161%. Right, so we can see quite clearly previously the 127% extension did offer an area of support. We saw the pound consolidating above this area for a period of about 4 to 5 trading days before finally breaking lower last Friday. Right, so then we can use, as you can see now, price is currently falling towards the Fibonacci extension at 161%, although there's no other uh, major pullback or overlap support level that we can reference. However, I would use this extension level to help me identify an intermediate support level, which is going to be highlighted by this green dotted line over here. So we have an intermediate support level at the Fibonacci extension of 161%, which is at 1.2286. All right, we don't need 127 anymore because that level has been taken out, so it's no longer valid. All right, so these are the key levels for the pound on the daily time frame. Let's zoom in down to the 4-hour time frame and fine tune the analysis if necessary. Right, as I can see here, first resistance would probably lie around here, right? You can see 1.2481 price, the pound bouncing off this level several times since 15th of April, failing to break above this level before uh, dropping every time after hitting this resistance here. Second resistance I think is pretty much fine. If anything, if I were to try and fine tune the analysis, just drop it down over here so you can see how it's captured the market structure here pretty well. And of course, with regards to the intermediate support, that's fine, no changes to that. So if you are short the pound, right, if you have been shorting the pound since this morning, right, you can use the Fibonacci extension at 161% as a suitable area to identify a potential take profit zone, right? This could be an area here where the pound could find support, could stall around this region here, right? So hence, using an extension level at 161% would be pretty suitable to identify, would be pretty useful to identify a suitable take profit for any short pound dollar positions that you may currently have. All right, so these are the key levels for the pound on the 4-hour time frame as well. All right, so let's go on over to the Aussie. Similarly, once again, we'll start on the daily time frame. Right, since the second week of April, right, the Aussie rose as high as about 66.50 before stalling around this region and reversing to drop quite sharply, right? So of course, as it dropped sharply, it did retrace higher as well. You can see here on Thursday, 11th April, it retraced pretty strongly on this day as well. And you can see it's sort of consolidating now since last Wednesday as well. It does seem to have found pretty strong support around the region of 64 cents. So quite clearly on a daily time frame, this is a major support level for the Aussie, which is at 64 cents here. Second major support for the Aussie is going to come in at this swing low here. We can see when we look at this market structure here in mid-November, we can see the Aussie making a very strong or significant swing low bounce of 63.49, which is a level that we're going to use to identify as the second major support. Now, what about resistance? Right, when I look across here, there does seem to be a pretty decent overlap resistance here at 64.46. price previously finding support here in mid-February, and then finding a little bit of support here on 15 as well, 15 April, after which it found resistance since last Tuesday, right? So this creates an overlap resistance level here at 64.46, which is going to serve as our first resistance. Now moving up a little bit here, we can see that this retracement to the upside on 11th of April is another resistance area as well at around 65.53. So we'll use this to identify our second resistance. Right, we can also use a Fibonacci retracement. We're going to start this retracement from here. This high on 9th of April going down to last Friday's low. Let's pull up all the fibs and see what we get. We can see that, okay, that this second resistance here, this pullback here, we have a 61.8% Fibonacci retracement around this zone, so we'll keep that as well. And we can see that there is a 23.6, okay, price has already crossed above 23.6%, so right, we can't use 23 anymore. Perhaps we can use 38, so let's just keep 38 and 61. Right, so we can see here we have a pretty strong resistance zone around 61.8% Fibonacci retracement, and we also have another pretty significant resistance zone around the 38.2% Fibonacci retracement as well. Right, okay, so we could see the Aussie stall around this region here, right? We could see this Aussie stall around 64.50 and 64.70, and should it reverse off this resistance zone and drop lower, it may help us identify a potential short opportunity for the Aussie, right? We do have a potential bearish reversal on hand for the Aussie around this resistance zone here. All right, now let's move on down to the 4-hour time frame and see if there's a need to fine-tune the analysis. Okay, second resistance, right? When you look at it here on the 4-hour time frame, this looks like to be a pretty significant overlap as well, right? We can see price finding strong support here on 5th of April, after which it ran into resistance, and it's also an overlap level that aligns close to the Fibonacci retracement at 61.8%. Right, similarly here, we can see that this is also another strong overlap at 64.46, right? And we also have the Fibonacci retracement at 38.2%. Okay, no changes to first support, it's quite clear. First support is at 63.97, and no major changes to the second support as well. Yeah, this is perfectly fine. Right, and also not only do we have the overlap resistance and the Fibonacci retracement at 38.2%, we also have the bearish Ichimoku cloud as well. So when the cloud is red, it signifies bearish momentum, and the cloud itself can also offer or help us to identify areas of resistance as well, potential areas of resistance. So we have the combination of the bearish Ichimoku cloud, the Fibonacci retracement at 38.2%, and an overlap at 64.46, all pointing to a significant resistance zone for the Aussie. So this here could serve as a potential reversal area for the Aussie, a bearish reversal. So it would be this zone here can help us identify a suitable short entry as well for the Aussie here. And then of course we can use the first support at 63.97 to help us identify a suitable take profit level as well. Alright, so these are the key levels that we have for the Aussie on the 4-hour time frame as well. Alright, is there any other currency pairs that you would like to have a look at? Otherwise, let's move on over to the commodities. We'll look at gold and oil, right? Let's switch it up from currencies and take a look at the commodities. We're starting off with gold. Alright, so let's look at the daily time frame. We can see gold prices have pulled back quite strongly today so far, right? It opened at about $22,380 per ounce, dropping as low as about 2,351. Right, so quite clearly in terms of resistance, we do know that this is the all-time high for gold price here at $2,431 per ounce. And also we can see, at least on the daily time frame, this level here as a pretty significant resistance as well. We can see the body of the candle, at least on the daily time frame, the body of the candle has failed to close above $2,391 per ounce. So I'm going to use this body of the candle as my first resistance, and of course I'm going to use the all-time high as my second resistance here. Now when I look across this level here, at 2,359. This looks like to be a pretty decent intermediate support for gold prices here. Let's zoom in a little bit. You can see that since 15th of April, gold has managed to stay above this level, right? And it's a level that's currently being tested as well. So this may not be the most significant support level here. Hence, I'm identifying it as a intermediate support. Similarly, when I look across this level here at 2,333, there's also another decent pullback that's occurred here over a period of 3 to 4 days, right? So this is also another potential support level for gold prices here, right? I think we can also use a Fibonacci retracement. We're going to start the retracement from here, 14th of April, going up to the all-time high. Let's pull up all the fibs. Right, we can see that the retracement at 23.6% aligns very well with this intermediate support level here. So since we have a Fibonacci retracement as well to add to the significance of this level, I will just get rid of this pullback here at 23.59 for now, and then use this as the first intermediate support at $2,333 per ounce. Right, then when I look across the Fibonacci retracement at 50%, there is a pretty decent pullback level that's occurred here as well, right? So I'll be using this level to help me identify as the first support, identifying it as a zone. And also when I look at the retracement at 61.8%, this is also another strong support level here. So should gold prices continue to retreat further, right? I'm not saying it's going to happen, but should that occur, right, we can see that we can use these two pullback levels at 2,195 and 2,150 to help us identify potential support areas as well. Right, for now, let's just keep 23 and 50%. Okay, and we can also see that on a daily time frame, the Ichimoku cloud is green in color, is still indicating a strong bullish momentum. Although this precious metal is trading pretty far from where the bullish cloud is, but do take note, the cloud itself can help us identify potential areas of support as well. Okay, let's move down a time frame, drop down into the 4-hour time frame, and we can see quite clearly now that, okay, let me increase the opacity of this cloud as well, make it a little bit more obvious. Right, so we can see here, remember, the bullish Ichimoku cloud can help us identify potential areas of support as well. So we have several factors that lead to this strong support zone. We have this intermediate support or this pullback support level here at about $2,327 per ounce. We have the Fibonacci retracement at 23.6%, and we also have the green or bullish Ichimoku cloud that helps us identify another potential support area as well, right? So you can see here, should price manage to stay within this cloud and reverse, stay within this cloud, is quite likely it's going to bounce higher. However, if we do see gold prices break through or break below this bullish Ichimoku cloud, then that usually signals a potential reversal, right? It highlights a potential reversal in trend, and we're likely to see gold prices slide lower further. Right, when we look here back in middle of March, right after running as high as $2,200 per ounce, gold prices sort of consolidated for a period of 10 days or so, and it did find pretty decent support within the bullish Ichimoku cloud, right? So this is a good example of how the bullish Ichimoku cloud can help us identify potential areas of support, which is what gold did, right? For a period of 10 days or so, consolidating around $2,170 per ounce before finally breaking higher. So similarly, if this commodity can stay within this cloud here, it raises the probability that gold prices are going to bounce off this zone and move higher here. However, if we do see a clean break below this bullish Ichimoku cloud, then that is quite likely to highlight a potential bearish reversal, and that would mark the end of this bullish trend. So take note of how the cloud can also help us identify potential reversal points or inflection points as well in trend with regards to trend. All right, okay, now looking at the 4-hour time frame, right, just going to fine tune the levels a little bit. No change to the second resistance. First resistance is going to be this pullback that occurred here on 18th of April, last Thursday and Friday. No changes to the intermediate support. Uh, First major support I think is fine as well. Wait, maybe there's a 38 here. Now that we go down a time frame, let's see the 38 as well. All right, okay, right, on the 4-hour time frame, I can see that this is a pretty significant overlap support level at 2,265, right? We can see price running the resistance here on 1st of April, then bouncing off this level a couple of times, 3rd of April as well as the 5th of April to create an overlap support, which also aligns well with the 38.2% Fibonacci retracement. Let's keep that on there. And for the second retracement, second pullback, second support, I would use this level here at the 50% Fibonacci retracement. Right, so as we drop down the time frame, right, it is we are going to fine tune the analysis and try and identify major, identify additional support zones or intermediate support zones as we can are able to spot better overlaps or pullback support areas as well. All right, okay, so these are the key levels for gold on the 4-hour time frame as well. So take note, as of now, the Ichimoku cloud, the bullish Ichimoku cloud is offering an area of support. However, if it doesn't hold, then it's quite likely we've got a potential bearish breakout on hand for spot gold prices. All right, okay, let's move on now over to the other commodity, which is oil. So XTI USD is the instrument that tracks WTI crude oil futures. As you can see, crude oil prices have been pretty volatile. Of course, due to the ongoing geopolitical tensions in the Middle East. Right, so after running into resistance at about $88 per barrel, WTI oil sort of consolidated between 86 and 88 for about a week or so before finally tumbling hard in the middle of last week, right? And we also saw last Friday a very strong spike to the upside here. However, the downside seems to be pretty strong, right? Overhead pressures for crude oil seems to be pretty strong, and we can see that this commodity is still trading above the bullish Ichimoku cloud. So this bullish Ichimoku cloud could once again help us identify a potential area of support. Now, looking at this level here, right? This is a pretty significant overlap level at $81.34 per barrel. Previously, this level functioned as a pullback support on 2nd of November, and then as it broke above it in mid-March, it found support again to bounce off this level at the end of March, and today as well it has bounced off this level once more. So we can see quite clearly this is a pretty strong pullback support level, which is what we're going to use to identify as the first major support for WTI oil. Right, there's another overlap level that I see, and this is at $83.22. Right, previously price bounced off this level strongly on 12th of October. Back then you can see we had the Ichimoku cloud, the bullish Ichimoku cloud, offering a major area of support before WTI oil bounced higher. Then as it pulled back, it found support here as well towards the end of October, running into resistance here at the beginning of November. Once again, ran into resistance here in 19th of March. So this creates an overlap level here. It may not be the most strongest resistance. However, I've seen price react of this level quite strongly a few times. So hence, I would like to identify $83.22 as an intermediate resistance. Right, we can also use a Fibonacci retracement to help us identify any other retracement levels. Right, we're going to start this resistance levels. We're going to start this retracement from here, 5th of April, going down to today's low, 22nd of April. We can see that where the 50% Fibonacci retracement level lies. Okay, let's pull up all the fibs first. Where the 50%, where the 61.8% Fibonacci retracement level lies, there's a pretty strong pullback level there as well. And we can also see this intermediate resistance aligned quite close with the 23.6%. So let's keep 23 and 61.8%. So first resistance for WTI oil is going to be on $85.57 per barrel. Intermediate resistance at 83.22. Right, if crude prices rebound strongly over the next 1 to 2 weeks, then of course, if it's the next major resistance is going to be this pullback resistance here that occurred at the beginning of April, which is at around $87.80 per barrel. Right, what about the second major support? Second major support on the daily time frame looks to be at this pullback support level here at $77.61. Right, we can also use a Fibonacci retracement for this uptrend here. We'll start the first retracement from here, 5th of April, February, going up to 5th April. Let's pull up all the fibs. Right, we can see that the 38.2% retracement aligns well with the first support, as well as the 61.8 lining up with the second. So let's keep 38 and 61. Is there anything else that we can use? Okay, there's one more retracement that we can use from this swing low here in mid-December 2023, going up to the high of 5th April. I believe there's a 50% that we could use. Right, okay, we have the 50% here. Was there a 38? Let me see. No, there's no 38, so let's just keep 50%. So we have a Fibonacci confluence between the 50% retracement and 61.8% retracement, adding to the significance of this support level here at $77.61. So for now, right, due to the ongoing tensions, right, in the Middle East, right, geopolitical risks are elevated, it's quite likely crude prices could rebound once again. So this area here where we have the 38.2% Fibonacci retracement, this overlap support at 81.34 and the support zone of the Ichimoku cloud is helping us to identify a potential bullish reversal area for crude prices. All right, okay, so this is what I have. All right, as we come towards the end of today's session, are there any other requests that you'd like to see for any of the currency pairs or commodities? If not, then I'll just wrap up the session by looking at the indices, right? We'll look at US 500. Let's start with the US 500, looking at the weekly time frame here. So you can see this level here at 5,282. Okay, so the US 500 tracks the S&P 500 futures. So you can see here, this index made an all-time high back right at the beginning of April, going as high as 5,282. So quite clearly, of course, this is the all-time high for US 500. So this is the level that we're going to use to identify as our first resistance, first support. Right, the previous all-time high back in January of 2022 was around 4,781. This level now could then potentially be the first major support for US 500 on a weekly time frame. Right, what was previously a strong resistance area function as resistance again on 25th of December till the 8th of January. Right, over a period of 3 weeks before US 500 broke above this to bounce higher. So you can see this is a strong pullback resistance level, or previously was a strong pullback resistance level, which could now function as a strong pullback. So hence the first support is at 4,781. Right, we can also run a Fibonacci retracement from here. This swing low here on October 2023 going up to the all-time high. Right, we can see that price made a little pullback here on the first and second week of January as well. Right, so the first support is more of a zone rather than an absolute level, and second support for the US 500 on the weekly time frame is simply going to be the swing low here that occurred on 23rd of October. Now let's see if we can fine tune the analysis by moving down a time frame. Right, well, let's go down to the daily time frame. Right, so when we look at it on the daily time frame, remember the bullish Ichimoku cloud can help us identify an area of support. So this is what is currently happening, right? As you can see with Friday's candle bouncing off the bottom of the cloud and with today's candle as well. We can see the US 500 gapped higher and is rising as we speak. So it's quite likely we may have a bullish bounce on hand, right? So if you have taken a long position on US 500 today, right? Maybe during the beginning of the Asian session or the beginning of the European session, right? If you've gone long on the US 500, you can identify a suitable stop loss area level, rather a suitable stop loss level just below the bottom of this wick at 4,924, which is also of course below the bullish Ichimoku cloud. So probably setting your stop loss at about 4,900 would be a suitable area to identify a stop loss level should you have gone long on US 500 after it gapped higher today. Right, and where could we identify a suitable resistance area? Right, of course the all-time high is at 5,282. Price could eventually rebound back to this level here, but of course there's several resistance areas along the way. Let's see where they potentially lie. So let's use a Fibonacci retracement to help us identify those levels. We'll start from the all-time high here on 2nd of April, going down to Friday's low. You can see that, okay, let's pull up all the fibs first. You can see that it's a pretty decent pullback or overlap level around the 38.2% here. So this could be an intermediate resistance level at 5,059. And also I see another intermediate resistance level around the 61.8% Fibonacci retracement as well. So we're going to use the 38 and 61.8% retracement levels to highlight the intermediate resistance levels here. So the purpose of this resistance levels is to identify potential take profit levels or zones, right? So as US 500 is opened in the green today, and should it continue to rise higher, we can use the Fibonacci retracement at 38.2%, which is pullback resistance level here, to identify the first take profit zone. Similarly, we can use the retracement at 61.8% to help us identify another take profit zone as well, because we have another pullback resistance here at 5,147. Right? Okay, so these are the key levels for the US 500 on the daily time frame. All right, okay, so should there be no further requests, right, then let's just wrap up the session by looking at the calendar once again. Right, do keep an eye out. Right, this is quite a heavy calendar as you can see, but the three events I like to highlight are inflation data out of Australia, the PCE price index in the US, this is the Fed's preferred measure of inflation, and also we have the Bank of Japan dropping its monetary policy statement on Friday 26th of April as well. Right, take note, this is the calendar from Forex Factory. It's showing GMT time, so take note, we've also got flash composite PMI data out tomorrow. Of course, Australia CPI, retail sales out of Canada, durable goods orders out of the US, GDP data as well, unemployment claims out of the US, Tokyo core CPI, and of course finally the Bank of Japan monetary policy statement on Friday as well. Alright, okay, so before we wrap up, here's the final disclaimer or the ending disclaimer, right? Please take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital and you should only trade with money you can afford to lose. Alright, thanks everyone for tuning in to today's webinar. Do look out for all upcoming webinars by IC Markets for the rest of this week, and I look forward to seeing all of you at the next session. Alright, thanks everyone. Take care and have a great trading week.